There have been reasons like GST and various other reasons which is hurting the near term, which will all help if I look at it over the next 2 years. So we are believers that the medium term outlook on earnings is pretty good, and that should be positive.
There is a good possibility that earnings should rebound from the second half of this year. Broader macro picture is in place. It will be the consumption which will drive the growth, and as capacity utilization starts to improve, you will see capex recovery will happen with a lag, say a year or 2 years down the line.
We would be more focused on the domestic economy or its sectors, whether it be engineering companies, cement companies, and also on the consumption theme, because we do believe that India is growing, the disposable income levels are growing.
Public banks, like many private sector banks, have very good deposit base, and the cost of deposits is very competitive, and that's a sustainable competitive advantage.
In an environment where interest rates are coming down and domestic growth will pick up, then the mid-cap earnings growth will be better than the larger cap space. So probably mid-cap over the longer term will outperform, but the risk-reward at this point in time, looking at the valuation and also looking at if there is a kind of volatility downside, the mid-caps are probably more vulnerable at this point in time.
Large caps versus mid-caps, I would say it's fairly straightforward. Just looking at the valuations at this point of time, I think there is far greater comfort in the large caps than there is in the mid-caps. Risks which do the most damage are the ones that you didn't even know existed. So by definition, it's pretty hard to figure out what they are, because the ones that I think we know about and we talk about, in a way they're already reflected in prices, in valuations.
If you look at the performance over last 1, 2, 3 years, some of the biggest funds have turned in the best performance. So I think it is not, we are not yet there. A time will come when maybe funds become very large relative to the market. It's wrong to talk about the numerator without looking at the denominator, and that is what everyone seems to be doing. So people say inflows are large. Yes, but what is the denominator? It's a $2 trillion market. And how much is the industry collecting? 1% of the market cap. So is it good? Is it large? No. To deploy 1% of capital in a market which is 100 times bigger, where is the challenge? SIPs have become a very universally accepted way of investing, and they have actually gone beyond mutual funds also, which is very good. So people are associating equities with long term, which is good.